Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Folks, great to be here with you. Seth Udinsky, Sam Case, and live in studio, your host, Mark Manila.
Glad to be
great
here.
To have
it's
you, brother.
Awesome to be here.
It's going to be a great time. Hope you all are grateful to be with us. I know we're grateful to be with you as well. The phone number is 610-363-1110. We hope that you will join us on the phones. We'd love to talk with you. It is exciting here in the studio. We've got Mark and Cindy. We've got Yvonne coming in later. It's an FISM family reunion.
It is. Cool. It's a party.
Yeah, pretty cool. So we're grateful to invite you all in to join us in this family reunion here. Great Financial Issues show today. Appreciate you all joining us. Check us out, financialissues.org. Your calls and questions, all that today, as well as Stefan Padfield, our friend from the Heritage Foundation, is going to join us later.
That's going to be interesting.
Yeah, I'm really excited for that. He's been doing a lot of work on exposing ESG in the marketplace here. So right along
It's amazing there's still stuff that needs to be exposed. When you think you've gotten to the bottom, it just keeps getting worse.
Absolutely.
Yeah, Sam, you're exactly right. Why are we still talking about this? It's been proven wrong, but we're going to find out more. He's going to help us unpack this and see why this is still lingering on.
Yeah, don't miss it, folks. It's going to be a great time, about 10 minutes or so. First and foremost, though, guys, let's get right to it here with a story having to do with the home building sector, Mark. So, Sam, looks like Berkshire Hathaway is now buying a different U.S. home builder. They're expanding their investment empire on Wall Street. What's going on here, Sam?
That's right. The big boys at Berkshire agreeing to acquire Taylor Morrison Home Corporation in an all-cash deal valued at about $8.5 billion, acquiring it for $72.5 per share in cash. I believe that's something like a 20 to 24% markup of the original value, and the company is expected to finish that deal by the second half of this year. Now, of course, Mark, whenever Berkshire does just about anything, all the eyes go to it. So the question now is home building the new sector that we need to be looking at, because Berkshire's doing this? What does that sector look like right now?
Yeah, that's a good observation, is to say, should we be looking at this sector? Remember, Berkshire is a very big company. They have gobs of money. They can buy something, they can sit on it and wait 5-10 years and make sure it's a turnaround, but they do see long-term profits in it. They wouldn't buy it otherwise. So it is an indicator, but maybe they're just seeing it as a value at this time.
Just for context here, Berkshire's current cash is around $400 billion. Right. So this is kind of a drop in the bucket for them.
Yeah, I like what you see. And there are investment strategies where you follow the big money, right?
Yeah.
And this is big money, but what a lot of people don't understand is big money does things differently. Remember, Berkshire used to do things like buy a company that was on the outs, but had potential if it was led right, and then do a turnaround on it and then sell it. So they would buy it, put a lot of money into it, and then sell it and make a lot of money.
It was almost like a company flip, right?
Like flipping houses, but it was flipping business. They still do that. This might be one of those. Nobody's brought that up. I went and did some research about home builders, and nobody brought up that this might be a flip down the road or something like that. They're all, home building is the place to be. Well, is it really? Because valuations of home builders are a little weird right now, a little stretch. Leverage is stretched in many of them. I'm not so sure we should be jumping into this and following that lead. It does tell us that there is hope that the home building industry will grow in leaps and bounds, hopefully, over the next 4 years. We need it to. But there's no guarantee there. And at this point in time, I'd say don't rush into this. Don't rush into home building. In fact, I would say from a sector, it's not ripe yet.
What are some big problems in the sector right now? I know regulation's been a major problem for some time. Trump he signed an executive order, I think it was in March, trying to cut back on some of that. But there's also other factors in there, right, that are causing problems?
I mean, all the same factors that were there last year and the year before are there.
Trump's not just going to wave a pen. It's going to fix the sector.
We have fuel costs for deliveries of lumber, for deliveries of concrete. I mean, there's a lot of things that are still more expensive than they were, say, prior to the Biden years. And that is causing the cost of the housing to be in a situation where if you're going to build a home and you want to make money, you got to build it a certain size and value. You can't build starter homes and make money too easily. Now, that can come down as inflation starts coming down, which we're hoping it's going to be after this war's gone and after the energy costs come down. But we still have energy costs. We still have material costs. We still have labor costs. We still have interest rates above which most half our society say is high, and half says I'd love to have had a 6% mortgage for the most. But there's all these things that are still there, so that hasn't changed yet. When it does, that's when we should be looking at jumping in.
Mm-hmm. Mark, my follow-up question with that would be, I know we have a lot of listeners who might be interested in physical real estate investing. Maybe they have a separate property or something like that. Will this impact that at all for those listeners?
Say that again. Rephrase that for me.
Listeners who are interested in physical real estate investing, like say you've got a
they want to do
condo.
They want to rent out houses or condos.
How might
or
this impact them?
Yeah, good question. The main thing is that Berkshire bought this isn't going to affect them because we wouldn't see any impact into the needs we have for housing for quite a few years. Yeah, I mean, building would have to go on this rampage by all the builders all the time for a long time for us to catch up, to start seeing the cost of buildings come down, to start seeing rents come down as well, because there's enough housing, starting housing, and multifamily housing. Mm-hmm. So I don't think that it's going to impact somebody. If you're an individual and you buy a couple of condos or duplexes to rent out, I think it's still a great investment. Yeah. But you just have to remember there's a lot of legal and there's a lot of maintenance in those kind of things. It's good when you're younger to do those things so you can sell them later. Absolutely. When you get older.
Yeah. Mark, I found too with things like that, one of the biggest principles, I think, when you're talking about the physical holding of a separate property or another, investment property or several properties is, can you carry it without the rental income? Because you're going to have to at some point, probably. If the tenant doesn't pay, if you don't have a tenant, being able to.
I think the worst part would be the 3 o'clock in the morning. Hey, my toilet's stopped up, or hey, the water's off here, or hey,
this is not for me.
Yeah, but I had many clients who did that, and some of them bought small apartment complexes over time, and it was great for 10, 20 years, and then the spouse dies, the husband dies who's doing all the maintenance, and here I have a widow who can't keep up on these apartments, and they never hired maintenance people so that they could keep the income, and she needed the revenues to maintain her lifestyle, but she couldn't do it. And then she had to sell them, but she didn't know how to do that either. So, and I'm not saying she and he, but that's the way it was, the one that sticks out in my mind. So you have to be very careful. You have to look at all things. When you're getting into real estate as a to rent, to be a landlord, there's a lot that goes with it. Now, you may be able to do it, and you can bring in companies, but they take a third, a half of everything you're bringing in. So you got to be very careful. But I believe real estate is a good investment in general.
Yeah, great. 610-363-1110. Guys, we're also seeing, looks like Anthropic, which we've been keeping an eye on, Sam, is filing to go public. What are we looking at there, Sam?
Right, and this was actually just a rumor last week, even more than OpenAI. I really thought OpenAI was going to be the one to file first, but they did confidentially file their IPO prospectus with the SEC yesterday, getting ahead of OpenAI. They've experienced explosive growth this year, announcing in May that its revenue run had grown to $47 billion, up from $10 billion in annual revenue last year. Last week, also announcing a funding round with a valuation of $965 billion. So how do they determine that valuation, Mark?
Well, the same way you have to go into their assets, you have to go into the revenues, you have to go into all that. I mean, this is really interesting because we're going to see like 3 IPOs here that are going to take up, 4% of the S&P 500 each. Yeah. Think about that. I mean, we're $1 trillion IPOs, and it's
Has
just
it ever
incredible.
happened before, Mark,
No,
in the history?
no.
Yeah,
in fact, SpaceX might be the largest ever in history. And that's understandable, yeah. So this is really interesting, but a lot of people have been asking, what does confidential mean when you file?
That was going to be my question. SpaceX did the same thing.
Right. Yeah, and all that means is it's confidential. They're not showing their books to the world yet. What they're doing is getting with the SEC and preparing to do the full IPO filing. But at this point, they're going back and forth to the SEC, getting everything in order, trying to figure out what price they're gonna do it at, and that way their competitors and everybody else can't see what's going on at this point. But eventually, those numbers have to come out for them to go public, and when that happens, they'll set a date, and that'll be kind of exciting. I'm looking forward to Anthropic, and as well as SpaceX, as well as OpenAI. There's a lot of things that are coming. Welcome to.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. This just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com.
Do you know what you are supporting when you purchase mutual funds and stocks? Think about it. When you invest in a company, you make a decision to support the things that that company supports. And it may not be things that you agree with. Financial Issues is a ministry teaching people like you how to invest biblically, responsibly, keeping your investments clear of companies that may support an ungodly agenda. Learn more by going to financialissues.org. Financialissues.org.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby. Is that you playing guitar?
I wish it was, Mark, honestly. I wish I could say it was. It'd be more accurate if it were you. That's probably an easy riff for you, though, let's be honest. Play that in your sleep. Good grief. Yeah. Maybe in an alternate universe, we'd have guitar
The Financial Issue Band.
That's from our guest band called
band.
Stock Music.
There you go. That's right. Yeah. An aptly named band for our show, Sam. Stock Music. Anyway, stupid joke. 610-363-1110. Mark, I'm not excited about ESG agendas. But I am excited about our guest coming on to talk about
absolutely.
Yeah.
You know, the ESG agendas, they really proliferated during the Biden years because the government was pouring money into it, giving grants, moving money to corporations to endorse these things and embrace them. I'm surprised and very disappointed, Seth, that so many corporate leaders bought into this. Somebody to help us understand this. I know, isn't it time to stop talking about this? Shouldn't we be past this? But we're really not. And somebody to help us understand this is Stefan, who's joining us again. Stefan, welcome back to the show. We're glad you're with us because I actually thought we were moving on from this, but I think there's a lot more there than we realized.
Yeah, I think that's absolutely right, and great to be here. Thanks for having me in again.
It's a blessing.
This issue of, what it looks like on the surface, where we have some wins against things like ESG and DEI, but at the same time have to be very cautious about celebrating too much, because there are a lot of individuals and a lot of institutions that are all in on these agendas. And as far as they're concerned, they're just biding their time, right? They're dug in these institutions. Yeah, exactly. They're dug in these institutions. They're just waiting for the shift in the administration. They've got all of Europe, right? So they can always point to the majority of the EU and countries in Europe and say, look, we're just going along as we have to, and this is the way things are moving. I mean, I've heard advocates of ESG and DEI basically just say repeatedly and recently, you're fighting a losing battle if you think you're going to end ESG, right? It's what is happening right now. And then you look at the interests of China, for example, right? Which on its own is not really doing anything. It's spewing more coal than probably most, but it loves pushing us and Western nations and corporations to adopt ESG. So again, we have victories to celebrate, and that's fantastic, and we should celebrate them. But this is going to be our own long march, and we're going to have many, many fronts that we have to challenge in this on this issue.
Well, ESG, like many other other movements, isn't based on fact. And when we start looking at facts on things, the picture changes. Don't you think that corporations, once they see the facts on how they actually lose money for the company, then make money, would be just moving quickly to move away from this?
Yeah, I think there's many, many layers to that. And one of the things that I often will point to is that there's more than one set of incentives that is driving corporate leaders to embrace this agenda. And certainly one of them is it really gives them insulation, right? It decreases accountability. If the only thing you have to answer for is the stock price, that can be quite jarring. But if you're allowed to say things like, okay, maybe we didn't have the best quarter or the best past 12 months, but hey, we did all these wonderful, environmental, social things.
We saved the world.
Yes, exactly. It really provides a buffer. When you're beholden to everyone, you're beholden to no one, right? And so, it's a very basic line about man cannot serve two masters. And in the fiduciary duty space, one of the things we want the corporate leaders to be focused on is shareholder return for a lot of very good reasons, not just financial but also social. And this ESG agenda really allows them to lessen the accountability. That's one of the incentives. And then you have, as you mentioned, all the subsidies and the distortion of the markets that comes from the government interventions. You have the empire building and the personal brand building, right? Where these leaders who are probably on some level, many of them have some version of guilt about their wealth and their success. And so when they can, sort of trot out to, in Davos, how they're advancing the ESG agenda. So there's all these forces at work. And then on top of that, you have the fact that our data science is also corrupted, right? Time and again, we see these studies come out. We had the McKinsey studies in ESG. We've had a whole round of studies with climate where you get the initial study that says, hey, this is good for business. And then 6 months later, a year later, somebody tries to reproduce it and they can't. And then they actually run the numbers again. And it turns out that, it actually is completely the opposite. I mean, I've got a op-ed coming out that looks at, just as you said, ESG numbers for funds. And essentially it says at best, that metric, that screen is neutral. And when you add in factors like opportunity cost and removing opportunities for investment, you have to assume it's negative. And so it's not that people can't choose to invest on the basis of ESG, but our corporate leaders should be focusing on the bottom line. And certainly that's something, we have a number of proposals that we call ESG ROI proposals and also DEI ROI proposals. And the question is very basically, show us the ROI. You should be able to show us the ROI.
Yeah, and the impact. I know as Christians, we believe that all corporations should use and not abuse the environment. I mean, and definitely you don't want to use and abuse God's children. So, that's ESG should be in that light. But when you start taking money from those people you promised to run this company for, your stockholders, and start spending it on your own private things like, we want to save a cricket somewhere in Latin America, and then you lose the profits from that, and it really isn't doing anything because the data was not checked out to begin with. You really are abusing your employees and you're abusing your stockholders. And this needs to become to light. We need We need leaders in businesses that realize that God is in command. We need leaders that say, yeah, we're going to do the best we can with what God has given us. We're going to use it, not abuse it. And we're going to make good returns for our stockholders, because quite frankly, you shouldn't go public if you're not going to make money for the public. You're telling them, that is what you told them. I'm going to run this company in a way that's going to help you earn more money and have a better lifestyle, or be able to utilize that money in a way that honors God. And then they go and take those profits for 10 or 12 people on the board of directors and their favorite pet virtue calling things that they do. And that's really sad.
Absolutely. I think, if you want to talk values, and we should talk values very often, one of the issues with ESG and DEI is that they're basically neurotic. They go about pursuing the things that they claim to want in ways that ensure that they make things worse, right? Like the net zero agenda is never going to change the climate in a positive way, but I'll tell you what it will do. It will reduce our energy independence, and it will reduce our national security, and it will increase the affordability crisis. So all these things that you supposedly are pursuing in the name of a good goal, you just make things worse. Same thing with DEI. You claim you want to uplift historically marginalized groups. Well, the worst thing you could possibly do is basically teach people that they have no personal agency, that they live in a systemically racist and sexist society where nothing they can do other than basically rioting in the streets is going to help them. I mean, it's just ridiculous. We're going to get rid of testing standards. So even if we purely focus on the terms of the values as stated by ESG proponents and DEI proponents, they fail, because the way that they advance their agenda is counterproductive, which then starts raising these questions of, there's this saying, the issue is never the issue is always the revolution, right? And the intended outcome is the actual outcome is the intended outcome. It makes a lot more sense to understand ESG and DEI if their goal is actually just to undermine Western civilization, to sow chaos, right? So that they can ultimately institute their godless revolutionary regime. So that's really where, on whatever front we do it, whether we do it on pure ROI, shareholder return, or whether we do it on values of uplifting people in society, they're on the wrong side of this. And we just keep having to show up, tell the truth, speak the truth, and get people to understand that even though these are very nice sounding words, right? The environment, social governance, diversity, equity, right? That what's going on under the hood is corrupt, and we need to call it out.
Totally evil. It's just like everything else the enemy does. It's the opposite of what God would do. He wants to treat everybody as a unique, precious gem. They don't. They want to treat everybody as racist, or divide everybody and destroy our culture, and keep you from God. I really believe that's part of it. They turn that into the cult of environment. Worship the environment, not the God.
Yeah. It's interesting, guys. Stefan, I'd love to hear you speak to this. What does it say about a company if they at one time bought into this ESG stuff and now they're trying to reverse course? Is there any kind of warnings that that maybe some alarm bells should go off in our mind if we see a company that does that? Can we really trust, hey, you know what, this company's moving in a good direction?
Yeah, I mean, I think the old phrase "trust and verify" is front and center. So we absolutely want to support and acknowledge corporations that are moving back to center, doing the right thing. Everybody can make mistakes. Everybody can change their mind for the better. So we don't want to just, punish corporations for what they've done in the past simply because they were bad actors in the past. We want to support them if they're really genuinely changing course. Some of the things we can look out for is this simply rebranding, right? Or is this actually a fundamental change? And so one way you can do that is you can go to their website and you can look for, they used to blazon DEI, diversity, inclusion, quotas, and all this on the front page. Now you have to dig a little further, and that's where you can start to see whether there's been a real change or whether they're just shuffling around the chairs on the deck of the Titanic, right? So both things can be true. We have corporations that have generally realized this stuff is problematic, and they're going back to neutral and they're doing the right thing. And then we have other corporations where it's just a shell game and they're just making changes for show and they're just waiting for the tide to turn again, and then they're going to be all in again. And then we have others that are just brazenly saying, we don't buy any of it. We're still all in. in on ESG and the Southern Poverty Law Center and the Human Rights Campaign, and we love all of it, right? And those we just call out straight up.
Amen.
For the problems.
Amen. And
Absolutely.
what a blessing it's been that you would join us today, Stefan, because there's a lot to this, and it's not going away as quick as I thought it would. And they're just relabeling it. But thank you so much for being with us. We are so blessed. If somebody wanted to know how to get more information, where would they go, Stefan?
Yeah, first place is heritage.org. So I'm part of the Free Enterprise Initiative at the Heritage Foundation, do a lot of great work there. And you can certainly find me on X at Stefan Padfield. And I try to keep that, pretty steady stream of things that we're doing and others are doing in this movement and in this space.
Awesome.
Excellent. God bless you,
Stefan, we appreciate you so much, brother. Folks, again, Stefan Padfield, principal for the Free Enterprise Project and senior legal fellow at Heritage Foundation. Hey, listen, we want to thank you so much for your desire to invest with biblical integrity. Those of you who have to leave us, we'll miss you. We hope you have a great day. Join us tomorrow. For the rest of you, more financial issues coming up right on the other side of this break. Don't go anywhere.
As a member of Samaritan Ministries, your monthly share is
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. When an abortion-minded mother hears that sound, 80% of the time, they choose life. For $28, you can sponsor a life-saving ultrasound and share the hope of the gospel with a mother facing an unplanned pregnancy. Hi, I'm Mark Manella, host of Financial Issues, and today I want to encourage you to give to the amazing work of Preborn. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
You're careful about what you bring home when shopping, especially when it comes to feeding your family. Shouldn't your investments work the same way? At Timothy Plan, we offer a wide selection of mutual funds and ETFs that can help you allocate assets without compromising your values. From technology to healthcare, energy to real estate, our funds are not only diverse but uncompromising to your values. Timothy Plan funds are filtered to avoid companies involved in abortion, pornography, human trafficking, and other harmful agendas. What you invest in should reflect what you stand for. Are your investments bearing good fruit? What's in your portfolio? Contact your financial advisor today to find out, or contact Timothy Plan directly at 1-800-TIM-PLAN to discover more. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Mark, I always love when Stefan comes on. It's just his wisdom is vast and deep.
Absolutely,
sure.
Yeah. I feel very blessed we get to associate with him and have him on our expert panel.
Absolutely. And I just wanted to ask you, Mark, from your expertise, why? This might be a stupid question, but why do companies still do the ESG stuff? Like, why have they not gotten wise and figured out this is not going to make us money?
Well, remember, ESG in its purest form is probably a good thing. Respecting life, wanting everybody to have equal opportunity and stuff. It's just got taken over and been used for power plays. So those companies that are using it, that won't let go, they have some power from it right now. And they're receiving probably not only financial backing, but they're receiving influence and affluence, not just in the United States, but over in Europe. An international company in Europe has to be involved in ESG. So if you have a large company that's around the world, they have to play ESG over there. They have to run from it over here and, maybe neutral in other places. So they've decided that it's best just to hang on to it. They have the power they need with it at this point. When it becomes uncomfortable enough, they'll move on.
Makes sense. Makes sense.
I've also heard from some people there's a whole business right now that's helping companies get rid of their ESG stuff, and it's so built into the fabric that they don't exactly know how to do it. Well, so it's a process to weed these weeds out of the company.
Right.
Think about human resource departments. Now, I might be wrong, and I don't have any statistics to back this, but all my experience with human resources is that it's usually manned by liberal people. And they're the ones embracing this.
I didn't say it, folks. All right, Mark said it. I agree. Usually it's liberal ladies, and nothing against the ladies, but usually it's liberal. Yeah, that's exactly right.
Yeah. So there's a lot that has to be done to make this move on. And there'll always be people who any leverage they can get, either power or money, they will use it with no soul, no reason for morality or anything. Just embrace whatever makes me more powerful. Not my company, not for my stockholders, not for our country, but for me. That's the way evil works. I, me, mine, I, me, mine, I, me, mine.
And you hit it on the head with Stefan, Mark. I mean, we just need business leaders, and I think honestly it starts at the bottom. If you work at a company, you have some level of influence over that company, and so you're able to, in your sphere of influence, try to push the company in the right direction. What is that direction? It's the direction of making a profit,
right?
And hopefully glorifying God while doing it, but serving the shareholders, serving the public. Simple.
Right.
Make the CEOs aware of these type of things too, because sometimes it is middle management, and they, they hired someone during the whole George Floyd thing, trying to cover their butts, and then it got so ingrained, it's kind of metastasized into this woke cancer in their companies.
And that is what happens, and unfortunately, we're always going to be there till Christ returns. Remember, as Christians, sometimes we live in this bubble where we think everybody thinks like us, where we want to do good for all, not just for ourselves. But that's not the way the world works. This world is ran by the enemy. He is going to and fro trying to devour as many as he can. And what we need to do, just like we talk about stewarding in our stewardship, we need to steward these companies. That's why we do biblical responsible investing. ESG doesn't automatically put you on a bad list, but usually ESG leads to you doing stupid stuff that will get you compromising biblical principles of morality by being racist, by just using it for power and causing problems in the workforce, problems in the environment. Just the opposite of everything is supposed to be about.
Yeah, absolutely. Well, folks, listen, if you've got questions about what we talked about, we'd love to hear them. 610-363-1110. Speaking of which, we've got a call coming in, Mark.
Well,
Nelson.
Let's go there.
Yeah, let's do it. Morning, Nelson.
Good morning, guys. I haven't talked to y'all for probably at least a month.
Well, it's good to hear your voice. What's on your mind this morning?
Well, I thought I'd give a testimonial. You guys were talking about long-term investing yesterday, and Mark made a really good point that long-term it's a hold until it's a sell. And I wanted to give a testimonial on one particular stock. Now, I also want to be clear that not everything in my portfolio has been a winner. So, you get some losers.
I knew there was one out there.
No, Nelson,
that is investing.
It is, man. Yeah, it's exactly right. It's real.
So, first of all, I've been a partner for 9 years, built my portfolio coming out of a 401k. It took me about 3 years to invest my whole 401k, so it was not a fast process. And I learned a lot along the way. I traded too much at first. So here's the example of one winner that I've got, Broadcom. It was purchased in 2019, okay? As of today, because they report tomorrow, it's up 1,000% from my cost basis. Yeah. Now, you guys know, we always love to talk about our winners. I've had some stocks that I've lost 50% on. I try to forget those, so I can't be real precise about that. But when I started, if I bought a stock on the buy list and it went down 20%, I would sell it. I was frustrated, right? Because I did not understand the process of buy and hold until it's a sell. So I know you've gotten some new partners that have come in, and you get a lot of questions about, hey, I bought this stock 3 months ago and it's down. What do I do? And you answer really well. Oh. Sell it if it gives you heartburn at night, but hold it if it's still a hold or a buy. And that's a really hard thing to do when you first start out, is when you see something lose, especially like I started out with $10,000 moving out of my 401k to my IRA. So if something lost a couple $100, it was, giving me heartburn.
Yeah.
But I do want to say that the system works, but you also have to do homework too.
There you go.
It's not all on you guys. You give us a list, you give us some recommendations, and they don't always work, but if you stick with the system, I think you'll have success.
There you go, Nelson.
Amen,
just recently, we had a conversation internally here about certain stocks and certain things, and somebody said there was a new stock I'm looking at. I want to put it on the buy list, and we're discussing whether we should or not. And somebody said, well, we don't need another one in that sector right at this point. It's like, why not? If it's a buy, it's a buy. We have partners who can go through the different, maybe there's 6 companies that are very similar, but if they're all buys, give them the opportunity to buy into which ones they believe they want to utilize most. And our goal isn't to manage the portfolios for you, but to give you the information to be able to manage those portfolios. That's why we have the thing we call financial issue steel. It deals with all the fundamentals. We look at the revenues, we look at the profits, we look at free cash flow, we look at the projected growth. We look at all these things in the fundamentals, and we determine, does this have financial issue steel, which is the long-term investing, meaning this is a vehicle, this is a ship that's made to weather the storms and over the long term get to the destination, which is profits. And that way, if a storm does come on, if the markets pull back, this could pull back 10, 20%, but it's going to continue trudging forward through the storm, maybe a little at a time sometimes, and maybe it'll shoot like some of those skyrockets. But the idea is, if it has the financial issue steel, and it still has the potential, if the world hasn't changed to that point, it's okay to just hold it, even on those pullbacks. And that's really important right now, Nelson, because we have valuations. Some people are saying the markets aren't that overextended. Some people are saying that it's extended. We have valuations that are pretty high in the markets right now. We got to be careful. And we have a lot of profits. We have a lot of earnings beats like never before. In fact, it's a historic time for the markets on how many companies are beating their estimates on earnings and revenues. So we have two opposite forces, a storm coming in here and backwinds here, and they're coming together. So the possibility is we continue to see a market climbing, but with some erratic pullbacks here and there as people take profits, as institutional take profits. And if you have the stewardship discipline and realize what you're holding has financial issue steel underneath it, that ship's going to continue on. You don't panic. You sleep well at night, and you continue on realizing, yeah, it pulled back 5, 10%, but that doesn't matter because it has the ability and it has the backwinds to continue going forward, even as the storm pulls back a little bit. So I appreciate you. I appreciate that testimony, and that was really good to talk about because this is a good time to be talking about those things, Seth.
Yeah, sure is. And Nelson, one of the things that you mentioned, which I think is so important, is a real investment portfolio is not going to have all your stocks going up at the same time. It's just not. That's darn. And it's a bummer. We always joke about, hey, only buy the stocks that are about to go up. Right. Sometimes it doesn't happen, though. Sometimes it doesn't happen. And so we're here to try to help you be able to kind of come up with the tools for your own to be able to find those companies.
That's why we do all that analysis. That's why we have the asset allocation models. All this stuff is to help guide our partners to make the right decisions, not to tell them what they should do, because God might have a different path than he would for Seth or me or Sam, for you. But we give you the information so you can make great decisions without having to spend all night, every night, doing the research. That's what we're here for. And then you can make the final decisions on that portfolio after you get on your knees and go to your Father and ask him for his guidance in this. And we are so blessed to be able to do this. This is what makes me excited, is helping you honor God in all you do, including the way you invest, and that's investing with biblical integrity.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
As a member,
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Mark, in our chat, Stephen from Oklahoma stole one of my phrases to talk about you. I love that he said this, but he says, Mark is cooking this morning. Great encouragement. Stephen, couldn't have said it better myself, brother. Thank you.
Financial issues, cooking with Mark.
Cooking with Mark.
You know, we got a second here, so I just want to take a second. I'm going to go off on a total rabbit trail just because I woke up this morning, spending some time with the Lord, and the one thing that came to mind was, what is the one thing I could do to honor God today? And that's not an easy question, because all day long we have stuff we have to do. We have to do the show. We get to do the show. There's all sorts of things. And my answer to that question was, honor him by whatever I do as unto the Lord, meaning nothing is done for any other reason but to glorify God. And that can include doing the show. It could include how I invest. It could be how I treat others today. But the goal should be for me today is, how do I honor God in all I do? And I think that's by the way we care for others, and we care for one another, and we care, even if ESG's way out there, we care for everything he's entrusted to us. And that's what stewardship's about. It's about how we live out the truth of our salvation. So maybe today ask yourself, what's the one thing I could do to honor God today?
Yeah.
And see how that affects your day and your relationship with our Father.
Well, Paul says that we should even honor God in what we eat and drink. So, that includes just about everything else, I would imagine.
Yeah.
How do you drink coffee to the honor of God?
I know. I would say just enjoy it. Just enjoy it.
Just enjoy it.
Yeah,
Praise
exactly
God
right.
with it. Yeah.
No, guys, it's a good thought. I've been thinking about this a lot recently as well, that in the stewardship relationship, God has the hard job. God creates us, sustains us, deals with us in our sin.
There's the hard
shows us
job.
great. That's the hard job. Our job's the easy job. Just be faithful and obedient.
Yeah, and just let him change us from the inside
Simple.
out.
Yeah.
His power.
I should say simple, not easy, because it can be hard. But listen, it's simple. We just got to be faithful. Just be faithful.
Amen.
Yeah. 610-363-1110. Folks, we'll get you if you call in before the end of today's show. The markets yesterday, guys, mostly positive to open the month of June thanks to tech. Kind of despite the nonsense in Iran we saw over the weekend. Monday's closing bell, we saw the Dow Jones up slightly. S&P at a new record mark. You were talking about those market valuations with Nelson earlier. The NASDAQ was up about 0.5%. Russell 2000 down slightly. The markets this morning have opened kind of mixed, actually, kind of inverted a little bit from yesterday. Yeah. Now everything's in the red. Before the Dow Jones was positive. Red where we don't want it, and green, well, oil's down as well, too. So a bit of a mixed bag.
Well, gold's up.
Gold's up. There you go.
Just a little bit, but
there
it's up. Yeah.
Yep. Making our gold bugs happy. 610-363-1110. Hey, Mark, here's a good question from another Mark, actually, one of our partners who shares your name. 64 years old. He says, I'm a longtime partner. I think... And this is just Mark saying here, maybe this is his opinion. I think there might have been a slight shift in the advice for the use of the income portfolio from the past hosts of the show now to Mark. So this Mark is saying, in the past, I believe it was recommended more for use in the last years of expected life, while a conservative growth and income portfolio was recommended well into retirement. I'm assuming all retirement income will come from the portfolio. What's your current view? So Mark, what's your thought?
Yeah, I'm not so sure there's really any difference in the way we look at the portfolios. Somebody in their later years, in their retirement, leaning towards income is because they don't have time to recover from pullbacks. They don't have time, any other source of income. They don't have a spigot turned on like you do if you're younger and you have a job or you have a business you're running. So in general, that's the way that would work. But that doesn't mean that's the only way it should work, because remember, God has a path for you. It is maybe overlap other people's paths, but maybe not. So you may be in your 50s and God is telling you, despite everything we talk about the markets and needing to grow the income, so you need some growth in there. But maybe God's telling you it's time to get as conservative as possible, because I have use for that money you do not even know about at this time. As a steward, you have to be prepared for that. You have to listen to the Spirit first and foremost in all things. So I don't think there's any difference in the way Dan and I looked at this. I would say that maybe in my conversation, I might lean from generalization to application. Yeah. Does that make sense?
It does. Yeah, absolutely. And Mark, one of the things, and I'm not talking to Mark Manila, I'm talking to the Mark who asked the question now. One of the things you might be remembering is back in the days where Dan was the host, our model structure was different. We had models based off of specific ages, the 25 to 35 model, the 55 to 65, 65 into retirement.
And that's a good generalization of why, because as you get older, again, when you turn off that income spigot from earning money to having your money earned for you, that's a different world. And that's why you lean more and more towards income, always keeping some growth in there, though.
Exactly. Yeah. Yep. If the Mark who asked this question is thinking of anything differently, I think it's simply the way the structure was. But like you said, Mark, it's the same heart behind it.
Absolutely.
The same thought behind it.
Same generalization, but I often talk more about application. And that's not any different than Dan, because he did the same thing. So I think that Dan and I are on the same line. I think that there's anybody who really dealt with money for a long time has seen why you go down this road. And Dan and I, are approximately the same age, believe it or not. Yeah. And knowing him over the years, I never saw any difference in our philosophy. So.
Yep. Well said.
I hope that helps, Mark.
Absolutely. Mark, here's another good question from William from Mississippi. He's saying, it's not really a question, actually, more a suggestion. He says, I'd like to see FISM note on the buy list the best placement of the buy. So should this go into a Roth? Should it go into traditional, a regular investment account? What do you think about that?
Yeah, I was going to get kind of silly here and say, well, it's easy. Everything goes into the Roth.
The Roth, yes.
But but you know, and the whole idea of that is we're trying to maximize tax impact. But you can't always do that. You only can put so much in a Roth, and then you can put some in the IRA.
You might also make too much money, and you have to find out other ways, like the backdoor Roth.
Exactly. Yeah. So whenever possible, especially with major growth stocks or high income, both those can cause taxes that you may not want to be paying if they go into the Roth. Then you don't have to do that. The only thing I'd leave out of the Roth are things like REITs or BDCs, where anything that you have to get a K1 on, because there's other laws and taxes that they could hit you with. So those you'd want to have in your traditional, just your individual investment account. But whenever possible, start with the Roth and then go to the IRA. And there's really no need to really have that. Where's this best held? You know, sometimes if it's a long-term hold and you don't have room in your Roth, you could skip the IRA and go directly to your individual account, because there are some tax benefits to doing that, to where if it's a long-term hold and you've held it over 12 months, well, these capital gains are going to be taxed at long-term capital gains rates instead of your short-term capital gain rates, which is the same as your income tax rate.
Yeah,
it's substantially less.
Yeah, absolutely. It's a good question and a great answer, Mark. Walter is asking a question as well from Texas. He's saying, Mark, is Cherry Hill Mortgage Investment Corp's 8.2% Series A cumulative redeemable preferred stock a good buy? That was a mouthful. I can't believe I got all that out.
Yeah, that's a tough one.
Sometimes I impress myself.
You know, I like the income from Cherry Hill. That's a good question. I like the income from it. You know, the yield, and that's great and everything. And you know, structurally, they're okay. There's nothing really wrong with them. So I can't diss this product. However, the one thing that really concerns me, especially in an income portfolio, is it's a very small company comparative-wise. So there's a risk there in a leveraged company that's also cyclical. So we got to be very careful with that, is what I'm saying. Would I say get out of it? No. If you already own it, you might want to keep it, but I would not make it a major holding in your portfolio. A minor holding, maybe.
Yep.
Was that clear enough?
I think so.
Okay.
I think it was pretty clear. Clear as day. Walter, thanks for the
question.
Clear as day.
Okay.
Exactly right.
A rainy day or a sunny day?
No, sunny and fun here at our Philadelphia headquarters. Hey, folks, we appreciate you all joining us today so much. Mark, I just wanted to remind our listeners, if you missed the interview earlier today with Stefan, you can always go back and watch past episodes on financial issues. The place to go is financialissues.org. And then I think you hover over, actually, let me just make sure that I have this right here, Mark. You hover over the show. So it's the little tab at the top called the show. Right. And you go down to episodes on demand. You can catch past episodes going back for months, possibly even years. And so you can catch today's episode. The reason I bring that up, Mark, is today's interview with Stefan was so good, and people need to be able to hear it for sure.
Yeah, absolutely.
Yeah.
And, you know, the thing I liked about Stefan's interview is he just says it straight. There's no dancing on this. There's reasons why corporations do this, and they're not generally for our benefits, and it's generally power and money. And we need to know that, and we need to hold those companies accountable. And guess what? As investors, you do that by investing with biblical integrity. One thing we really love about our partners, our listeners, our watchers, is their desire to honor God in all they do, and they do that by the way they invest with biblical integrity. Thank you for doing that. Thank you for loving the Lord. Thank you for being with us today. We really appreciate the ability and the desire to have us into your home and to care and serve you in this fashion. God bless everyone. We're going to see you tomorrow.
we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.